Hello, good morning, guys. I hope you're doing well. And good morning for a new edition of the Croissant Files Live. I have, an update with the dashboard today. I added a couple of things to it. Hopefully, it will be interesting for you. I'm considering, remixing stuff. Maybe for people who are more interested in the markets, put the dashboard at the beginning rather than at the end, and then push geopolitics and economy further down the show. So if you're interested only in the market stuff, then you can watch it live, or I will extract anyway the market dashboard into a YouTube video that you will be able to watch later, just to give you a little more flexibility for you guys on this Croissant Files Live. So I think it's, no, let me check. So everything seems to be working fine. Please do not hesitate to share comments here. We have the LinkedIn Live, we have the YouTube Live as well working. So everything looks fine at this time. So I think we can go. So the only stage you still have the comments. People and a couple of you have asked me to open the comments on the YouTube stream. I think it should work. If it does not, I don't know why at this time. But it's now what? It's now 10:18, 3 minutes in. So I hope that people who wanted to join in are in. So let's start. Let's start with what? Let's start with this. The tariffs. So just a global overview. We'll talk about the aftermath of the Trump Zelinsky meeting last week. A lot of things unfolded after the difficult meeting that they had. The Zelinsky insulting Vance during the meeting, and other stuff happening. We'll talk about the tariffs in the economy sections, and the market segment will now be dedicated to the market dashboard. So let's start. I'll try to be as complete as possible. Forgive me if I go back and forth, because I just noticed that the slides, the information I have here is not exactly in line with my notes. So I may be back and forth, but so you'll get it. So what happened after this meeting? Trump decided to stop military aid to Ukraine. So he stopped sending weapons to the hub that is currently located in Poland. The idea for him was to put pressure on Zelensky, because he said that as long as he's receiving weapons, he has no incentive to negotiate a peace deal. So we had some back and forth. Zelensky, after leaving Washington, went to London, where he saw many of the European leaders. Nothing much came after that. There was a summit on Wednesday, and we'll talk about it later. But nothing really came after that. Just happy to see people supporting him, which pissed off Trump, actually, because Zelensky went to see his Democrat supporter in US, and that's the funny part, because it feels like both Zelensky and Europeans act like if the US administration had not changed at all, which is kind of totally delusional. I mean, the shift to the Trump administration is a major change, and this will obviously change the way both Ukraine and Europe can behave, because they totally depend on the US support. But again, I will talk about this slightly later. So some back and forth, some pressure put by Trump, and after that, now Zelensky confirmed that he was ready to sign the main US target, which is the deal for the minerals in Ukraine. That's how Trump wants to get the US money back. Okay, so let's move on. So this has large consequences, because Trump is also putting pressure on Europe to try to force them. I don't think he may not be actually totally abandoning Europe. The only thing is that he's trying to get his money back, because as you've seen, as you see on the pie chart, the blue part is the US contribution to NATO, which is about 70%. So if the US doesn't contribute, it totally collapsed. The other part is that Trump wants other countries to participate more, to give a bigger effort to the NATO spending, specifically to ensure its security. So in comparison, the US doesn't really contribute a much higher part of its GDP. But in dollar terms, it's obviously the bigger part, and Trump wants a bigger return for its investment for the security in Europe than what it has now. So that's what's going on, and the way to put pressure on Europeans to increase their spending is to say, to have declaration like you had Musk supporting US withdrawal from NATO and the UN. That's a possibility, but again, that's also very possibly negotiating, talking point for the Trump administration to force Europe to spend more on defense. And this probably works, because this is exactly what came out of the European summit this week, where the Europe not only said that they would contribute $800 billion of support to Ukraine to compensate for the withdrawal of the US and to be able to continue war, and also increase their own spending into something that would be a European defense. And this is where we start to see I believe the end goal for most of the European leaders that are heavily pro-European federal state, I would say. So I think that the end of the game is not necessarily a war with Russia. I think the end of the game for them is to build a European Federal Union for leaders that are, again, very highly pro-EU, and at the same time they are very unpopular in a country. You have Keir Starmer as very bad polls. Macron is one of the worst polling presidents in French history. You have the new German Chancellor, Merz. So he has been elected a week ago. So you could say he's popular because he won the vote. Actually, he won the vote by kind of a small margin, and will be forced into a coalition to make a government that lasts. And at the same time, is also pro Federal European Union, because that's another part of Macron's game at this time, who has made a TV speech to the French people, saying that France is at war, a very warmongering speech. And he offered to share the nuclear deterrence to Europe, which would be a huge loss of sovereignty for France, in my opinion. This is to me some level of treason, because at the end of the day, if you do that, and this is also a reason why France is a permanent member of the Security Council of the United Nations, is because France has the nuclear bomb. Germany doesn't have it, and so the transfer from the nuclear power from France to Europe will be a loss of sovereignty, because we would have to ask Germany to use that bomb if we want to. And technically at the UN there will be the French seat actually would become a European seat that would be shared with the other country. So that's, I believe, a very big deal, but it's totally understandable from Macron's point of view, because his goal is to build a European federal union. So this is where we are now, and it's a little bit crazy. So that's the narrative, the rhetoric around NATO at this time. So yes, I would just so all the French newspapers were making their front page on Macron, saying really crazy stuff about possible war, Russia, saying that Russia is a threat. I mean, which is kind of funny, because there's a cognitive dissonance here. Russia is making progress. That's true. Very slow progress that is due to the nature of the field, specifically the Donbass. Now they are reaching a point where they will be reaching the plains that can go flat, basically through the Dnieper river. So the nature of the conflict might change in the next week. But if you consider that Russia has made 200 kilometers progress on the front line in 2 years, at the same time, it's very difficult for anyone to say that Russia is a threat and will be in Paris the next month, right? It doesn't make any sense. But they have been used to gaslighting and trying to make you think that what you think is not true, and using things that don't match together. That, I mean, it has become basically a habit at this point. So, like I said, I mean, every European leader has an incentive for very different reason to continue the war with Ukraine. Even the UK, that is not in the EU anymore. But the Bloomberg headline that I've seen here is that Europe has already contributed. The issue is now that Europe has already contributed quite a significant amount of their weapons to Ukraine. First with outdated weaponry, now with newer weapons. So they will have to rebuild anyway. And without the U.S. intelligence, they cannot do many things at this time. And this is one of the concerns in Ukraine at this time, because if Ukraine doesn't have the intelligence, the support of the US intelligence, it will be very difficult for them to build some attacks against Russia. Or for instance, the control of the radar in the air, such as the AWACS planes, that gives you some support to target some specific areas that against the people against Russia. you would not have access to this. So Ukraine is totally dependent on this. Europe is totally dependent on this. So if the US stops, it's basically game over, whatever these European leaders say. So, which again, as a conclusion, I would say, still leads me to think that the objective for each of them is not exactly Ukraine, Russia. The objective for them is domestic issues that they have to solve domestically and not internationally. In other words, they don't care as much about Ukraine as they say, in my opinion. So, so one of the other sign that it's the conflict is shifting. So the ones that are talking about peace and are pushing is peace is Trump. You don't hear much about Putin talking peace. He's receiving what is assumed, what he thinks is a good news from from the position in the Trump administration about peace, but they are not pushing to give peace because they are in a position of strength at this time. They are recovering most of the region, the Kursk region at this time. Like I said before, they will be reaching an area of Ukraine where it will be much more difficult for Ukraine to defend these positions. So Russia at this time is in a position of strength in this conflict. They have no incentive to push, and the longer they wait for a ceasefire, the better the conditions that they will get. And this is basically what Trump's understand, and why Trump is pushing for a peace and a ceasefire as soon as possible. So you've seen one of the tweets. So you had two tweets here. That's the tweet. What the tweet government system? Well, anyway, I mean, I was just trying to say that Trump is governing with tweets, which is a big issue for the markets as well, because this creates uncertainty in a lot of ways. But just don't want to go ahead of myself. But if you look at these two tweets, first on March 1st, Trump was considering relieving some sanctions on Russia if there was coming to a ceasefire. But then a couple of days later, it was the next day or 2 days after, Trump put another tweet saying that Russia is pounding Ukraine on the battlefield at this time, and they are getting stronger. And so he wants now he's considering imposing new sanctions on banks on Russia to push them toward the ceasefire. I mean, this just, I believe, shows that the position of strength in this conflict is not the US, is not NATO, is not Ukraine. The position of strength is held by Russia at this time. And so I think that at this time, this is the reason why Trump wants to push peace. By pushing for peace, he basically tried to flip the script and doesn't want NATO or the US to be seen as the loser of the game, if of the conflict. If this continues for too long. So I believe that's where we are right now. Couple of things about the geopolitical situation, specifically in the Middle East. So another time we have replaced a dictator by a butcher. So we had Assad, who was not the coolest guy, obviously a dictator, yes, but minorities were protected. Now you put a fundamentalist, Islamic fundamentalist in power in Syria to remove this guy and, you know, get access. And what do you get? So this week I have seen, you know, very horrible videos that you can find on X if you're looking for the situation in Syria. You have, you know, assassination of minorities. It's getting pretty ugly. You know, you have to remember that you have on one side Al-Jolani, Al-Qaeda face, and the other side the face that he gets for the Western people with a very nice suit. Here you can see him shaking hands with the you know, is he Spanish or Portuguese? I don't remember. But the guy, you know, the head of the UN at this time. Now this guy is revealing his true colors. That's pretty ugly. So let me check if we have some comments, questions before switching to the economy. Where are we? Yeah, we have a couple of guys here. That's cool. Daniel, always here. Fahad, new guys. Do I have a replay? Yes, I will have a replay. And this will be available on YouTube as well. So no worries here. Okay, so let's move on. It seems, by the way, that the stream on YouTube is not going so well at this time. No big deal. I will re-upload the video on YouTube if necessary, if it didn't work, and let's keep moving on. I know it works on LinkedIn at this time anyway. So the economy, try to go a little bit faster. I know I say that. You know, just transition from geopolitics to the economy. Remember that when the war started, Europe said we will, and the US, we will impose sanctions and will kill and crush the Russian economy. Now, if you compare this 3 years into the war, the Russia GDP growth is at 4%, when the EU and the UK is less than 1%. The unemployment rate is very low. The debt is very low as well. So again, Russia comes out as a winner in this. And you know, I didn't know about if Russia would experience some growth. Usually, the war economy is good for the GDP of the country. And I wrote, I believe it was in March or April 2022, 1 or 2 months after the start, and when Europe started imposing sanctions, that it would not work and it would hurt the European countries first rather than Russia. You know, I've been insulted, everything, that I was a pro-Russian, a pro-Putin, whatever. But you know, when you try to open eyes to people and tell the truth, an inconvenient truth, it's not always well received. I don't care. I am not saying this to say, okay, yeah, I was right, you were wrong. But I would rather have people keep an open mind to be able to entertain ideas they are not agreeing with or even not comfortable with. If you want to understand how it works, you have to be able to think differently than you do, or otherwise you're just in an echo chamber, and I mean, it's basically useless. So I wanted to show this slightly later, but you know, if you look at the GDP of Germany, for instance, Germany is the only country which GDP was negative, well, at least in the list here, in Q4 of last year, or was it totally last year? I don't remember. I could check in that note, but so I mean, you see that Germany's growth is quite bad. If you look at the insert, the white insert, you can look you can see that Germany's growth stopped basically recovering after COVID in 2022, when the conflict started and when the US blew up the Nord Stream 2 pipeline, and they lost access to cheap energy that they actually need for the heavy industry. You can see that, so the little inserts, maybe we can do this. myself here. So here was the ranking of the GDP uh, based on what? I don't remember the time frame from data, and I've lost it in my note. You just have to read my the Croissant Files newsletter on Monday to figure that out. But this just shows that many countries that have the higher GDP growth. You have like India, Turkey. So the US is not too bad at this point. Russia is not very far behind. But Germany, like I said, was negative, and basically you have the all European countries. So that's not the GDP, that's the change in real GDP. So that's why this number may appear high, but they are not the GDP. This is the one that are making progress. So you see the US making progress, you see Russia making progress, and you see basically Germany, the European countries lagging for the reason I've mentioned before. I know I have a tendency to repeat myself, so I will try not this time. So we can have a little word on Oh, I see. You've lost me. Oh, shock. I understand what was wrong. Uh, I guess you can hear me now. I'm sorry, you probably lost me for quite some time now. That's the issue of managing this with the other system without having access uh, to to the comments, because I don't see anything when you're not. So I mean, I will. You know what? I will do it again very very briefly. No, what I will do is that I will record this again, this economy sections, because I think you lost me at the beginning of the economy section. So I will do it again. I will record it. I will not restart now because it will be too long. And I will post it as a video either on LinkedIn or YouTube. This should be a 15 minutes video, but maybe I can do that to split that for people who are interested in different segments, geopolitics, economy, and the market dashboard. So sorry about that, guys. I hope you now can hear me. If someone is still there, because I would understand that you have left, considering that you probably spent 20 minutes without hearing anything. So I understand that you left, but that's fine. Okay, so let's go from there and let's do the market dashboard. Okay, I had other stuff to say, but I will record this one again with the mess on the crypto. So, okay, guys. So let's move on to the market dashboard, which has this week a couple of innovation extensions. So let's do that. So market dashboard, we'll start with the majors. The way that I do it is that I split between major indicators for markets based on ETFs quoted in the US, liquid ETFs such as SPY for equities, TLT for bonds, UUP for FX, US dollar specifically, GLD for gold, IBIT for Bitcoin, and USO for energy, for oil. And what you can see here, so the impact on tariffs has been pretty terrible this week for the market. Like I mentioned in the economics section, that Trump, by managing tweets, by going back and forth between tariffs against China, Mexico, and Canada, retaliatory tariffs from these countries as well, until some delayed on the tariff as well. So a lot of uncertainties that rocked the boat this week and weighed on the market. But what I think is interesting is that this week we had both SPY, so equities, bonds, and the US dollar going down, which is unexpected, which is not unexpected, but it says something. So we've seen that the bonds are not the safe assets, at least since 2022. The bonds are so the long-term bonds are in a drawdown of 40% at this time. So they have lost massively since 2002 and inflation. So they are no longer the safe assets, specifically about, when you consider the debt that I mentioned before. You also have the US dollar, that is usually another safe asset that went down at the same time. So what does it say? That maybe some money is leaving the US. It is investing the US through equities, through bonds, and then you need less dollar and buy foreign currency. That's a possibility. Now, what has become the safe asset in this world? The safe asset that has been the safe asset for the world in thousands of years, which is gold, which is one that has performed well this week, along with Bitcoin and IBIT as well. But it's more like, this week 3% on a week it's within the range of the noise, so it's not really significant at this point. You can note that the Bitcoin or IBIT is down around 17% from the all-time highs. So considering that the Bitcoin volatility, it's not that big. The other thing that you can see from this is that oil has been down significantly as well this week. This is another indication that investors are considering the global economy to be slowing down, probably as well with the tariffs that will limit exchange between countries. So that's I believe is something to be worthy of noting. In terms of market activity, you can see that the sigma ratio, which is short-term volatility versus longer-term volatility, is above 100%, which means that the market is slightly in tension at this point. Not only it's above 100%, but it's growing, specifically for equity markets. It's above, it grew 20% this week for both equities, and it grows 15% for the dollar. So there's there's some activity there. You see the volume ratio. It would be more interesting maybe on futures, but you see, excuse me, volume. Oh, I need to take a drink. Sorry. So volume ratio is increasing on. Sorry. So I'll try to get my voice back. I think it will be difficult. So volume ratio is increasing. I sound like RFK Jr. It's very difficult to hear, but excuse me, it is what it is. Maybe I talk too fast, speak too fast, and too loud. I don't know. So volume and volatility are increasing, which is an indicator of higher activity in the markets. Things are changing, turning around, and happening. Then we'll see that as well. So if you look at equities specifically globally, we see exactly what I've shown before, but with a spin, because you can see that equity markets were down, US equities were down, where emerging markets were up, global market were, except the US, were up, and Eurozone stocks were up as well. So again, that's another indication that we may have some transfer from the US to non-US, outside of US at this time. So is it a long-term move outside of the US, or basically simply a rebalancing between the US and other region, with the with Trump and the global, relationship between the U.S. economy and the other ones in the world, and in terms of change in terms of geopolitics as well, that remains to be seen. But you see that what I would call the the market tectonic plates are currently moving. If you see on equities, all the volatility ratios are above 1, so except maybe emerging markets, but they are all increasing at this point, and the volume is increasing as well. Bonds is not looking good, so it's mainly US bonds regarding ETFs. What I can tell you more than that, we have commodities. This is a section that I want to increase a little bit. I only have a couple of ETFs, but there's not that many ETFs available on commodities, so I should be able to get the same data on futures to be able to give you some significant data on this. But we see what I've said before, safe asset gold is going up, and basically the global economic activity indicator, to me, that is oil, is going down. So basically that's what markets are expecting at this time. We can see on Forex. Forex is pretty simple. We have the US dollar down and all other major currencies up at this time. Again, rebalancing or a long-term effect of tariffs. We'll see. But again, everything seems to be in tension at this time. You have volatility increasing both on the US dollar, on the euro. It's basically flat for the yen, and surprisingly the volatility decreased quite significantly for Canada. But again, probably that should do this on spot or futures, FX futures, rather than ETFs, where these ETFs in terms of dollar is not trading much anyway. But that will change in the futures. On the crypto side, no surprise, it's based on what I've said in the economy part, where Trump announced a strategic reserve in crypto, but this announcement was rapidly disappointing, because first, not only Bitcoin, but it was supposed to include another group of cryptos such as Ethereum, Solana, ADA, Cardano, that kind of stuff, which I believe, XRP, Ripple, which I believe are not playing the same game as Bitcoin, in my opinion. But it was really disappointing, very rapidly, as Trump tweeted that the strategic reserve will be made of assets seized by the government. So it doesn't talk about investing and buying either crypto on the market to build that reserve. It will be mostly, at least at this time, built on assets seized by the government, which is why crypto market collapsed right away after jumping on the initial news. So we go back to the market, and basically the majors that I have on the first panel of the market dashboard, just to show you, it's not exactly the momentum, but it gives you the momentum here, because this is the market change since 2024. So you see that Bitcoin is still leading the way. Gold, SPY is correcting a little bit. Oil is correcting as well, but since the beginning of January. since basically we started speaking about tariffs. If you look at oil, basically the story is pretty simple. It started moving based on the news of the Trump election, started going up with Trump being introduced as a not introduced. I don't even know what you say that, but made officially president, and then as soon as we started speaking tariffs, which is bad for global exchange and global economy, obviously oil started going down. So this is where we are now. Maybe more interesting is the risk-adjusted momentum, which is an indicator of multiple time frames of momentum from 3 months to 1 year, adjusted by the short-term volatility. And what does it show you is that the actual risk-adjusted momentum collapsed in the US dollar. So that was interesting. Gold remained flat, but it's been flat for a couple of weeks now. The volatility is not increasing much. The momentum itself is not increasing much, but so this is where it goes. We see that oil risk-adjusted momentum has turned negative on the move this week. The bonds who were recovering before that, which was a good sign, for strategies for 60-40 or 60-40 or risk parity, has stalled with the selling of bonds this week as well. So basically, the risk-adjusted momentum flatlined at this point in March. So this is where we are. What else can I show you? So this is, I like to look at the spreads to see what, not only, it's cool to see what's going up, what's going down, but I think it's more interesting in terms of market dynamics to look at how markets behaved compared to each other. So you pick a reference here for equities, obviously it will be the S&P 500, and look at the different market sectors compared to the S&P. So here we see that the Qs underperform the S&P, but it's not really surprising. They are highly correlated, but there's a higher beta for the Qs compared to the S&P, so that's not surprising. But I think that it's more interesting to see the market action between the small caps measured by IWM ETFs and the industrial and the more larger caps measured by the Dow Jones Industrial Average. So because I believe that what you see here is in the context of a market going down, you see the spread widening between the Dow Jones and the Russell 2000. Or 3000, this one, I remember, who cares, but that's more, that doesn't negate the point that there's a flight to quality at this point on the market, from small caps to larger caps, and more basically potentially industrial stocks rather than pure technology stocks. I should have maybe looked at the Max 7, but I didn't. Here is the, when you compare the European equity indices compared to the S&P, you see the massive recovery that these markets have experienced since the beginning of January this year. It's pretty insane, So for instance, the French market was down 25%. It recovered 15% in 2 months. From the beginning of 2024, now the Euro stocks are regained all its loss of 2024 in 2 months, and Germany is leading the way by now being up 9% versus the S&P 500 since the beginning of 2024. So you see the huge turnaround that we could see previously in the numbers, a shift from the US to Europe at this point. I think that the beginning was motivated by the end of the war. The second probably leg is also motivated potentially by a shift induced by the tariffs. Again, this remains to be seen. I should have prepared a chart about this, but because if you look at the really long-term chart of this, of European equity markets versus the S&P, it's a clear downtrend with some kind of blips up like this, but the longer term trend is down. So that would be interesting to see again if it's a shift, significant shift, or if it's just a short-lived stuff. Specifically, if we compare again to what happened with the tariffs in 2016, and then the market recovered. So we'll see if that happens again. What is this? So I think it's interesting often to check versus the versus gold, for instance. You see that the S&P versus gold is down when you have the S&P going down and gold going up. So you don't have to be a genius to figure that out. But since 2020, the S&P doesn't make any progress versus gold. At this time, it's going down since the beginning of 2024, and it's true for all the main assets, for bonds, for dollar. The only one that resists at this point, maybe, but it's at the same level over a year, is the equity, the European equities at this time. But they are also in a huge level of debt. So I don't expect, compared to gold at least, to be massively overperforming. So I'm sorry, I just want to remind you that this is not an investment advice. This is the banner that you've seen scrolling on top. I want to remind you a couple of things for I want to keep the regulator happy at this time. So this is not an investment advice. This is a market comment, just an opinion. That all investment involve a degree of risk, including the risk of loss. So that's very important as well. And that past performance, specifically when I show you performance of markets or indicators or whatever, relative, in absolute terms or relative terms, their past performance is not indicative of future results. So that's very important to keep in mind. So don't base, this is, again, the reason I'm doing this is also for me, is that to get some time to reflect about the markets and be some food for thought at this point. But I forgot to put this, and I messed up in a lot of ways today, but this is what it is. So we had this week the S&P 500. You see how it looked. It didn't look very good. Last week, Friday rebound was very short-lived. It was probably some window dressing at the end of the month for many funds. And it went down again as soon as the next week started. One slight recovery. It was when on Thursday or Wednesday, I don't remember exactly, but again short-lived, and we made recent new lows. With again, volatility keeps rising in a very kind of stable way. It's not a market shock. Sudden surprise like COVID could have been. We are definitely not anywhere near COVID levels anyway, but it's just an example of how it can happen. Not even in August last year, when we had a volatility spike, on a very short-term volatility spike, where there were fear about the carry trade unwinding at this point. So this is where we are now. Okay, so, and maybe the last one of the last chart is one of the new that I shared in a post this week, which is 2 indicators of market activity. But it's another way to see the same thing that I've shown you in the first slide about of the market dashboard about the market activity. What you see here is that the relative volume and the relative the volatility are both increasing, which again suggests an increased market activity, which is natural in down market. But it gives you, when you see market activity turning around and starting going up, it's the time to take a look at what's happening. So I put this chart from 2020. You see that here there is no so in 2020 we had both volatility and volume starting going up before the market actually crashed. So that, again, it's not an indicator that it will crash. It's an indicator that is maybe time to pay attention to the market, because when everyone is basically quiet, doing their thing, the market is going up slowly, then there's no reason for people to extra trade. People are extra trading whether they are fearing of missing out or fearing of losing money, such as in bear market. So again, the activity is interesting because this tells you maybe that's the time to pay attention to the market, and both volatility and volume are rising at this time. So maybe the next one, what is it? It's Bitcoin, but it will be replicating what I just said. The current drawdown on Bitcoin is around 18%. Last snapshot that I took yesterday. I didn't have the time to check this morning, but this is where we are. So yes, so I mean, nothing much more to add to what I just said. So that was the market dashboard. Thank you for following. I apologize for the issue that I had with the sound. This is my whole mistake. I changed a couple of things yesterday in my setup. Obviously, I screwed up, but again, what I will do is that I will record again this part to be able for you to catch up on the economy side if you are interested. So again, sorry about that. Let me check. Oh no, I mean, it's interesting. I mean, there are some guys, some of you have stuck to it through the maybe 15, maybe 20 minutes that I went without any sound. So thank you very much for sticking to it. Let me check if there was some comments on YouTube because some of you asked for it. No, who cares? So thank you guys for sticking with it. Again, I apologize sincerely for the issue. I will post the video on YouTube and potentially on LinkedIn. So stay tuned. Thank you very much. Enjoy your weekend and see you next week. Bye bye.